Kia ora koutou katoa, ko John Small, toka ingoa, and I'm very pleased to be visiting you here today in Tamaki Makaurau from my home in Te Waipunamu, otherwise known as the mainland. As you know, thank you very much to Payments New Zealand and all the sponsors for putting on this wonderful event. It really is great to be in a room together after all this time. So, as you know, in this space, the Commerce Commission is kind of the new kid on the block. This is a new role for us in the payments sector, and so it's my pleasure to give you a bit of an outline of how we see our role and how we see that developing. I'm also, I've got my dibs in for the least interactive slide of the competition of the conference, so please vote for that. The Commission is, of course, a creature of statute. Everything that we do is kind of defined by the functions and powers and obligations that are in the acts that we're required to administer. In the case of Payment System Act, the Retail Payment Systems Act, the main objectives being sought there are efficiency and competition for the long-term benefit of merchants and consumers. Now, that focus on consumers and merchants is what drives us, therefore, and we're very familiar with objectives of this type because those are very pretty much all of the acts that we administer and enforce have similar objectives to that. So, for example, the Commerce Act, the Fair Trading Act, those sorts of things are aimed at the long-term benefits of end users. And we're also, of course, got the same kind of objectives in industry-specific legislation that we also administer, such as the Telecommunications Act, which is also aimed at that kind of consumer focus. Thirdly, of course, it's consistent with our Commission's whole vision and strategy, which is about making New Zealanders better off. And we aim to make New Zealanders better off by encouraging and helping people to be confident participants in markets. If you're a confident participant in markets, then that's a great outcome because it implies that the market is working well, otherwise you wouldn't be confident. It implies that you trust that the market is working well, going back to that sort of trust theme. So how do we get confidence? How do we get consumers and merchants to be confident participants in markets? Well, we do that by providing hopefully a stable, reliable, predictable regime that enforces and incentivises behaviour on the part of suppliers to markets that reinforces the general objective. So it's a virtuous cycle, if you like, that if consumers feel good about participating in markets, then firms are also confident and they can invest and the benefits can flow from that. So, of course, how do we do that? It requires us to be quite sensitive to commercial imperatives, and we are sensitive to commercial imperatives, particularly what it takes to bring forth capital investment and the pricing and assessment of risk that goes into that, and the sort of, we see this in traditional infrastructure that we regulate, like electricity lines businesses, which are very capital intensive, and we also see it in less hard, if you like, industries, less physical infrastructure, so tech-based startups and new economy firms. So I guess the underlying theme in all of this is that we're very conscious of the value of fair play across markets. Trust is enhanced when everybody believes that everybody else is playing fair. That applies not just to consumers, it also applies to firms. If firms believe that their rivals are playing by the rules, they're more likely to play by the rules as well. And this concept of trust, I include the Commission in that. So it's very important for us to establish and maintain a reputation for doing what we say we're going to do, doing it in a way that's sensitive to commercial realities, but also in a way that enforces the rules in a fair and open, even-handed, impartial manner. So that's kind of the underlying theme, I guess, for how we're going to approach our new role in retail payment systems. If I go to that Act itself now for a minute, the first part of our job there is, as the Minister put it this morning, to resolve what seems like yesterday's problem but is still there, which is high interchange fees. And I know a number of you in the room, and I certainly was myself, were involved in extensive litigation over this 10 years ago. Very painful and expensive, and reached some kind of a resolution. But it always looked, to me at least, as if it was a regulatory issue rather than a competition issue. So it seems that I'm very comfortable as an administrator of that particular part of the Retail Payment Systems Act, because it does rebalance those relationships in a way that is likely to drive competition and efficiency across payment systems, not just within those two networks. So that's the first task, and as you know, that comes the constraint on interchange comes into force in about 4 days' time, and we anticipate that most people are already compliant with that, and we're going to be checking, obviously, to make sure that's the case. But as the Minister said this morning, the Act actually is much more, I guess, empowering than that. It does potentially allow us to do all kinds of things across all kinds of payment networks. And this is something that we're not used to at the Commission, put it that way. And it's caused us to reflect quite deeply on how do we conduct ourselves in a world where there are legislatively few limits on what we can do, on what networks we can look at, and so on. And so, of course, internally, what we want to do is to use our resources in the most efficient way, the way that promotes the purposes of the Act. And so the way we're going to approach this is slowly and in a listening and research and information-driven way. And we're going to start by looking at any flow-on effects that we see from the interchange regulation. So that'll require us to look, obviously, at merchant surcharging conduct, because that's an obvious way in which reduced interchange fees could flow through to consumer benefit as opposed to merchant benefit, which is immediate. And also whether or not and to what extent that intervention has impacts on adjacent and competing payment networks, such as buy now, pay later, EFTPOS, for example, and whether those, so how we're looking to see what are those effects, and what does that mean about competition and efficiency in retail payment systems more generally. Since I mentioned EFTPOS, I'll just reiterate that and use as an example for the point I made earlier about the need or the the drivers of commercial investment. One of the issues with the EFTPOS network, of course, is that the absence of revenue has meant the absence of investment, and that has consequences. So, we understand how these things work, and you can be assured that if you're involved in a payment network that's potentially in scope for the Retail Payment Systems Act, that we understand that everybody's got to make a dollar, and the costs have to be covered, and that investment has to come before use and value, so you can expect us to be, I guess, quite careful about how we act in this space. We're certainly not going to go, designating networks wholesale and regulating everything in sight. That way lies madness. We've got enough on our plate as it is. What we are keen to do, though, is to foster and support innovation, and that's implicit in the Act. It's explicit in the text of discussions in Parliament that led up to the Act, that this legislation is forward-looking in the sense that it's designed to promote innovation, and we feel that responsibility very, very deeply. That leads us, of course, to look at the bigger picture issues in the payment landscape in New Zealand, and I suppose inevitably that gets one around to the idea of open banking eventually, or quite quickly actually. And so we see open banking as critical because we see it as being a way to promote innovation and competition and efficiency in payment systems generally. We're aware of the current state of progress. We're really impressed with the standards development that's gone on. I guess regarding the next stage, we kind of understand, I think, but we've very much got our ears on here, but I think we understand in broad terms the commercial realities that are involved both on the fintech side and on the bank side of promoting open banking. And for the bank's point of view, it seems, personal view here, it seems like a collective action problem, that there's it doesn't work until all banks have done it, is one point. And the second point would be that from the bank's point of view, the nexus between writing and developing APIs and the commercial relationships that wrap around the trading through those APIs, those two things seem interacted. They're not necessarily sequential, because in order to get the confidence to invest in an API, you need to know roughly what the commercial deal's going to be. Otherwise, your board's not going to provide you capital. So we see this situation as being finely balanced at the moment. To the extent that we can help, we're keen to do that. If anybody's worried about Commerce Act implications, come and talk to us. But we are, I think, of a mind with the Reserve Bank and Payments New Zealand that we would like to see this moved along, and we'll do whatever we can to help. I think my time's up. I'll stop there. Thank you very much.